Well, the fallout from the BP oil spill includes the toll it'll take on U.S. oil production in the wake of the ban on new offshore drilling. My next guest says the U.S. output of crude oil may be cut by as much as 200,000 barrels a day in 2011, or about 8% of the Gulf's current production. Adam Sieminski is the chief energy economist at Deutsche Bank. Adam, good for you to join us. And that cut in production, first off, what is that going to do to the oil price, if anything?
Well, it could have an impact. It doesn't seem like very much, 200,000 barrels a day when the U.S. is producing 5 or 6, and globally there's 86 million barrels a day. But if you think about the annual growth in production, it's only about 1.5 million barrels a day, so it's a pretty big piece of the growth that's likely to happen between now and next year.
That is a big piece. It's moving away from the Gulf, though, but won't it just be made up somewhere else?
Well, it'll probably come from somewhere like the Middle East or maybe Latin America. If you think about what the impact could be on price, the combination of a little bit of loss in production and the likely higher costs that are going to be associated with drilling and equipment in the Gulf of Mexico and maybe even worldwide,
right.
That could add $2 or $3 to costs, and that might add $5 or more to prices.
To the price of oil?
Absolutely. I mean, I think probably not right away, but I think if you thought about an equilibrium oil price that might be the way the Saudis have been saying $70 to $80 a barrel, you might have to add $5 to $10 a barrel to that for some period 2 or 3 years out, let's say.
But then how much of that was produced in the Gulf was actually consumed in the United States?
Well, everything that was produced in the Gulf of Mexico was consumed here. The way things work in the oil industry is the oil usually comes from the closest place. Okay. And that's why we get a lot of oil from Mexico, Canada, and elsewhere in Latin America. Where that oil is going to come from doesn't matter so much as how much you're going to lose and what it's going to do to costs over time.
But it doesn't matter, though, that if we lose that production, that for better or for worse, in-house production, that we're going to basically have to import more foreign oil.
Oh, yeah. Well, Betty, that's exactly right. It doesn't really matter as far as trying to calculate the cost that's concerned, but it does make a big difference to national security. U.S. oil production has actually been going up over the last year or two. A lot of that growth was coming from the Gulf of Mexico. And to the extent that we aren't going to have that, that oil is going to have to come from places that are probably less secure than domestic production.
Right. I can see this just being sort of this never-ending cycle then, Adam. But aside from the lost production in the Gulf, tell me what you've calculated in terms of just lost economic output, lost jobs there.
Well, the moratorium has more than 30 rigs that are now not going to be drilling for oil in the Gulf of Mexico. There are a huge number of jobs associated with that, and it's not just the drillers. It's the people who supply them, the people that send food out to those platforms, and the companies that provide transportation back and forth. And
right, but it's not just that, right, Adam? Because then when you're talking about oil going to Florida, you're talking about property values going down, you're talking about tourism industry. I mean, overall, we're talking about a larger chunk of the GDP than just the rigs.
Well, sure. I think that Mississippi was saying they had very little oil, but they've had a huge drop in tourism in their coastal areas, and it's really kind of an unfortunate situation.
Right.
I think that the longer the spill goes on, the greater the costs obviously are going to be, and that's what that discussion at the White House was all about yesterday.